Welcome back to another recorded webinar of the Lionheart Forex Academy. We're here again. It's now 2:41 a.m. It's on a Friday. The market is closed, but I'm still here working. Always be a student to the game. Always keep grinding, keep learning, keep working towards new things, keep upgrading your knowledge. Knowledge is new currency, so we're here again with a technical analysis with the breakout strategy of the Lionheart Forex Academy. And I am your CEO, O'Brien Patterson, furthermore known as Penko FX. As we can see here, this is a technical breakdown of USD. We're going to show how we caught the buys. As you can see, the buys was also caught in the VIP signals group. This is before, and this is after, with the news of pushing it towards our TP. We're going to also speak about equilibrium, how equilibrium reacts in the market, how does it works, and how we can use equilibrium within the market to catch a lot of points. So let's get right into the technical analysis. This is not going to be a long video. It's more of a technical breakdown of how I caught buys, which was sent also in the signals group, in the VIP signals group. So let's get right into it. Okay, as you guys know, I have multiple videos within my course and my mentorship program with my webinars. And I also have two previous videos on my YouTube channel for free, which I show you guys how I find my major key level, which is support and resistance, with a little bit of minor and dynamic areas within the market. So let's get right into technical analysis. So as you can see, this was a few days ago. So we're going to bring the market back to the opening, which was on a Sunday, which was August the 7th, 2022. The market just opened. Okay, right here. Okay. So as you can see, this is Euro USD. The market is in kind of a consolidation range. When I say consolidation range, the market is not trending. These are markets that you should not put a lot of your faith in. You can trade a consolidation market, but it's like a buy and sell situation in which you don't get to be in a long-term trend. And I would strongly advise you guys not to trade accumulation or consolidation market. Accumulation is the same thing as consolidation. The market is not trending, it's going up and down in a sideways direction. As you can see, it's bouncing between a resistance and a support level right here. You just should buy and sell. That's how you trade a consolidation range. You buy and sell at each major zone. Once it's confirmed not being broken at that key level, you can buy or sell depending on if it's at a level of resistance or at a level of support. Or you can wait for the breakout to go long term within the trending market. But based off experience within the market and knowledge of books that I also read, it's being said that the market consolidates because there is a major news keeping the market from trending. So after that major news is passed, that's when the market will go back to start trending. So the thing about this is that when you are in a consolidation market, you can be patient enough to actually wait to see the breakout of the structure before you can say, hey, I'm going to go into this trending market. Or you can risk it and use proper risk management, because trading is all about probability. You can trade consolidation if you want to, that's on you, but I strongly advise trade a trending market. So it's best to be patient to wait on the breakout. So let's get right into it. As you see, you have major key levels that are being respected multiple times. As you can see, right here is the resistance level. It's the resistance level. So each time it hits these levels, you are selling short term to the nearest support level. as you can see, it's not a lot of pips, so it's not even worth trading if you don't want to. A lot of these areas that you see pushed up, it's all tested when it hits that resistance once you go to your higher time frame, as I teach in my previous videos. A lot of these pairs that are hitting these areas are like on the 4-ish time frame. They're tested areas. They're not broken of structure. They're all tested. So it's this type of thing with consolidation range and accumulation range is a thing that you're a technical trader, but you have to use fundamental analysis to know when the market will actually break out of that consolidation range to actually go back to trending. So once you're in consolidation range or accumulation range, I strongly advise you to pay close attention to the news. You can get your news updates from Forex Factory. They give strong news whether there's a red portfolio, when the news is going to be strong, when you should be aware of strong news, incoming news that can impact the market for you to get a breakout you've been waiting for like for weeks. Because as you can see, this consolidation range started from July 19 and we're in August when we finally get that breakout. So let's jump right into the technical analysis. So as you can see, the market was consolidating and it hit this major level of support, which was August the 7th right here. That's when the market hit a major level of support that it was been respected in the consolidation range. So a lot of people could have took buys and hoped for the breakout based off the news they have looked up on Forex Factory. As you can see right here, it's a buy. It hits a major level of support. It's in a consolidation range. You buy at support, you sell at resistance. If you're a scalper, if you're a long-term trader, you can buy right here. Based off the news, you can look to go longs. Okay. So this is where the buy started off at a support level, which equilibrium rebalance in the market in the consolidation range. So let's play it from right here and see how it goes. Okay. Yeah, so let's just take the market back to August the 7th at 17. Yeah, right here. Okay. Okay, so let's see how the market moves right here. As you can see, it's at the level of support, hit a major level of support. Balance comes in the market, it goes short bullish as expected. It's been doing that for the past few weeks. As you can see, it was approaching a new level of resistance. It's not really a new level of resistance because it's been there being respected. As you can see right here, there's a level of resistance. That's where the market is approaching. Once the market starts to approach that area, you're looking for a break and retest. As you can see, the market is making higher highs and higher lows right here. So it's giving you a confirmation of it's starting to make a trend. Remember, the market was going up and down. It wasn't making any higher highs or higher lows. And bear in mind, it can make small higher highs and higher lows, but once it hits that resistance level, if it doesn't break, it's going to stay in that consolidation range. But this was showing you another trend that the market can be possibly heading for a breakout. As you can see, higher high, higher low, higher high, higher low to go along, right? So as you can see right here, you could go on your 4-inch time frame and see that this was a strong breakout. As you can see, we'll have 1, 2 candles right here break above that resistance level. So that resistance level will now become a support level. So you're looking for a retest to go long right here. You're looking for the retest to go long. You did get a small retest, so your entry should be there, and you have your stops below. Depending on how much you want to risk, I would always say use a 1-to-1 or a 1-to-2. Don't need to risk more than that. As you can see, this is the cleaning setup. You could also apply a trend line right here. Okay, I'm also going to teach you guys a little about dynamics within this technical analysis. Let me pause this real quick. So as you can see, the market was making higher highs and higher lows, respecting this trend line. This was a minor tested area. You only can go on the Forex time frame. As I said before, always use your Forex time frame for technical analysis to guide you on tested and broken areas. It hits this area, make a higher high. It breaks that higher high and becomes a new higher high. And then it needed a higher low for it to continue going long. As you can see, this is a previous high right here. This previous high was broken to become a new higher high right here. You needed a higher low for the market to continue going up. But then again, this right here could be a dynamic area. This right here is a dynamic area. As I said before, it's possible that you can use dynamic to get clean entries if you missed entries. So if you missed all your entries up below right here, you could still get a good entry on that dynamic area, because dynamic areas are support and resistance within the trend of the market. So normally you have major areas that are made from past events, past rejections, but dynamic is current support and resistance, which is currently in the trend of the market. So, for instance, this was the high, right? This is the high. This high is basically a minor dynamic resistance. Once that resistance is broken, that resistance become support. So this would be a high. Once it's broken, it becomes a support. So it's a resistance with a high, and once you broke it, it becomes support. So you're looking for a retest to continue going on. As I said before, you don't take entries just like after a breakout, especially with bearish volume, especially the market hits a level of resistance right here. So sellers are going to come in the market and try to push the market below value and try to push it all the way back down. But the thing is that it's in a range. Once that it hits that key level, it can't go anywhere, any direction. As I said before, the market is based off probabilities. So the market can go at any direction at any given time. So once the market hits this major level of resistance, you have to be careful when the market comes back down to that dynamic area to get entries, because remember, a lot of people entered the market with sell stops and sell areas and major areas that people took sells, right? So if people took sells within the market and you're looking for buys, that's why you have a bull and a bear market. It's always versus bears versus bulls, right? It's always like that. So you have to know that even though you're looking for buys, you're gonna still have people in the market looking for long sells, short sells. So it's always gonna be sells versus buyers. But the thing is that the smart money goes with the direction of the market, and you want to go with the direction of the market, and you want to go with the smart money, because those are the only thing that can move the market. The central banks, the prop firm, the city banks, we can't move the market, so we have to go with them, and they know the direction of the market because they're good technical analysis readers, right? So based on right here, it hits a major level of resistance, the market is coming back down. But bear in mind, you're looking for buys because you see the market making higher highs and higher lows. So your entry would be right here at this dynamic area. But the thing about entries is that you do not take a buy on a bearish candle. That's very risky. That's not a bullish confirmation. So when the market is coming back down and you're looking for your entry to be right here on top of that previous high, which is now a dynamic area within the trend, you're looking for buys at this given area as dynamic. So you have to be very careful with your entry points. It's a dynamic area. You have to be very careful when you're trying to get your entry. As you can see, if you took buys based off this small bullish candle right here, you would have get stopped out based on your stop loss, right? So you have to be very patient to get a bullish confirmation, even a bullish engulfing candle. Wait for at least 2, 3 candles to respect that area before you enter the market, or you can just go on your Forex time frame. As you can see, you're not seeing a green candle on your 4H time frame, so you have to just wait 4 hours more just to have your full confirmation. As you can see, the candles and the bearish market push below the area that you needed to make a dynamic structure. So once that area is broken, it's not really broken, but it's broken on the 4H, on the 1H time frame and the lower time frames. But the strong time frame, which is your 4H time frame, it is actually being tested on that similar time frame. So we will stick to the 4H time frame right here just to see how the market reacts to that dynamic area. As you can see, it was tested right here. All of right here, it was tested, and that huge candle that you see was pushed to the top, which is a huge bullish volume liquidity push to the top, a huge volume. It's based off of news that was pushed forward in the market this week, currently in the US market. It helps the market to push for that breakout of that consolidation range, helps to break that resistance area, everything. So that was just a huge push based off news. But as I said before, it doesn't matter if you're a fundamentalist trader, a technical trader is always going to make more money. It's way better for being a technical trader than a fundamental trader, because fundamentalist trader doesn't always makes a lot of money because they're always waiting on news to trade, right? We as technical traders, we always see setups in the market, and the fundamentalist traders don't understand that the news just pushed the market in the direction of the technical analysis either way. So it's still going to go the same direction as your technical analysis. The news just helps to push it even faster and give it more volume. But as you can see, this area was tested. It didn't break below. It tested, as you can see, the candles close beside each other as a level of support. As you can, bearish candle and a bullish candle close beside its previous candle can be a level of support at a low, and it can be a resistance at a high. So yeah, let's just head back to the 1H time frame. So the thing about it is that we have to bring the market back a little just so we can see our entry point. So we have to close that and bring it back a little bit. Yeah. So as you can see, the market came to this level. It was also tested on the 4H time frame, because you can see right here it's also doing the same thing on the 1H time frame. It just has more candles. They're all closing beside each other. They did not break. They're all tested. So let's see. Okay. So as you can see, the candles close back above on the 1H time frame. So all of this below was just a consolidation area, a small consolidation area that was testing the dynamic area for, the market always takes out buyers before moving. So a lot of buyers who enter the market prematurely would have gotten stopped out. So this would have been your entry candle right here. This candle that was closed above the zone. If you go to your lower time frame, hopefully you can see an entry candle that you can take. Because you can see right here, it breaks above, the candle breaks above, this green candle breaks above, and you have two rejecting candle right here, two red candle right here that is rejecting, and then you have your engulfing candle. Then you have your bullish engulfing candle right here. So this bullish engulfing candle is your entry candle. You have two rejections right here. and then you have a bullish engulfing candle. So that's your entry on the 15-minute time frame. So you did get a retest on the smaller time frame for your entries, and just see where the market flows. That's a huge news that helps to push the market in your direction. And just to check, let's see how many pips from right here. We're up 215 pips, right? So as you can see, I'm going to explain the breakout strategy to you with two time frame correlation, which is 1H and 4H time frame, right? As you can see, the market did exactly as we expected with our technical analysis, making higher highs, higher lows, retesting major areas, pushing highs, breaking highs, of highs, which was its previous resistance, becomes support right here. Wait on a good entry right here, tested area on the higher time frame. The news pushes the market all the way up, breaking major support and resistance area. This area was a previous support, previous resistance as well. But as you can see, we're dealing with a current structure. So this is a resistant area. It was broken. This resistance was broken. This minor resistance was broken, and we did not get any retest for this area nor this area. So these areas are currently support areas, but they did not get a retest. And this area right here is just a minor level of resistance because it was a high. You can use it for a supply and demand level. So as you can see, the market pushed up and it also hits a level of resistance right there. That's where equilibrium comes in the market. A huge push for buyers and sellers come back in the market at this major level of resistance right here, which brings equilibriums in the market, which brings balance, allowing the market to have sellers to push back down. But the main thing is that my TP was above that key level. Why? Because as I said before, the market always, not always, but 85% of the time, the market does a retest, in which this area was broken July 5th, and it did not give a retest. So right now the market is coming back in the future to get the retest. That's one of the key levels, which is TP1, TP2 above. One of the key levels was retested right here. The market broke levels below as well. So you have to just understand that wherever you have a breakout, 85% of the time the market will come to give you a retest. So the market breaks above, did not retest none of these areas, hit this resistance, which was needed a retest from the past of July the 5th. We need some retest now here to go along to the previous resistance, which was also broken in the past, but we did not get a retest. So that's TP2 based off the past right here. That was broken and no retest. So even though the market is closed, that's my prediction for this week. That's my probability bias towards this coming week to see where the market will go. But we're currently in a strong downtrend. As you can see, we have a lot of areas that need to be filled as well below here. So I'm just the market is just retesting. Right here is areas that I'm looking for long-term sells. As you can see, the market is just retesting the areas that it did not retest in the past before it's gonna come all the way down long after retesting that area to go long for long sells. It's very structural, it's very technical, always flow with the market. So let's play the rest of it out, and then we can move on to next week. So as you can see, the market hits a major level of resistance. And let me just jump on the 4H time frame. It should be, let's just be sure. Yeah, pushed up. You got a minor retest. You got a retest on that minor resistance right there. It's just a high, but it's just a minor resistance area, which can be a supply and demand zone. Market went up to that resistance area. You can take short sells, which is a counter trend. You can take short sells to the area that was not retested. You can take short sells to the area that was not retested, which was all the way down here, to go long for the coming week. So there you go. So we did take short sells coming back to the area was that was broken and not retested, right, which was right here. Breakout but no retest. So the market came back to retest this area. So we're looking for longs right now to go to TP2 for right here, which the market broke this area right here, but did not retest it, but it retested the one below currently right now. So this is where we're looking for TP2 go long in the market again right here. TP2 above. So that's the aim we're going for TP2. And after hitting TP2, we are going back long because we are in an overall downtrend. The market is just doing its correction because you have to have counter trend within the market for the market to trend. So we're looking for longs all the way down the bottom at 0.98875. That's where we're looking for longs by the end of October. That's a total of that's a total of 513 points. 513 points. Let's just put it right here. 513 points reward. Yeah, so that's about it, guys. I hope you guys understand the market. Keep grinding, never give up. It's not easy. It takes a lot of work, and I'm still working as much as I can. Keep going, keep reading, keep never give up, never fold. It's rough in the market sometimes, but it's what you want. You want freedom, you want greatness. Go ahead and go get what you want. As long as you work for what you want, you will always get it. Peace out, guys. Cheers. A lot of love from Lionheart Forex Academy. This is your CEO, Brad Patterson, better known as Penko FX. Keep grinding, never stop.